Hey guys, just want to talk about my recent ETH trade. It was a short. It was called well ahead of time. I shared it all over my Twitter and my Telegram, but the reason I'm talking about it right now is not because I made good profits here. In fact, let's remove this, it's worthless. But it's not about the profit, it's about how this trade is a learning moment, even for me as I keep growing as a trader. Okay. So let's talk about why I took the trade in the first place. Well, the number one reason, of course, was because the market was forming a distributive range. Now, what does that mean? Well, we had two weekly levels or SR levels to look forward to. If I just focus on support and resistance for Ethereum, right? Let me try and get a fresh chart. Let's do this one. Yeah. So the SR levels are basically the same. The reason I'm going to the new chart is to explain it. Well, it's all about where price reacts to certain levels, correct? So if we take this level from 2022, right, and you can refine it based on recent touches, you can look for the most amount of times price has respected this level. I would even count this because remember, we look at support and resistance as zones. So there's multiple times where price has reacted to this level, both as support or resistance. So this was a really important weekly level. We're on the daily time frame, and this is more important on the weekly time frame, correct? And now we look at another level right here. Did not have much relevance back then, but it did have relevance during our run up this bull run because this was our bear market range. We broke up, we formed another mini range here, and then we went up, and this was during the Ethereum ETF listing hype. So, this is how you get your two daily levels, and price has respected them and it has formed ranges above and below them. And whenever we break through one level or find resistance or support at one level, the move towards the other side is usually a very thin move. It means that this is where not a lot of traders with size are willing to execute. That's why price moves very quickly once it gets here. And you saw this once we broke down from the support levels in 2024. This support level was respected one, two, three, four, 5 times, and then we broke down in one go, and this happened within 2 days. Once we found support at this level, 2150, we went back up quite quickly yet again, and the same thing happened multiple times. So that's my reasoning for the levels. I had a lot of questions on the Telegram about that. And then now let's look at some significant confluences for our levels. Now, this is a anchored VWAP that I've been using for a long time. This is anchored to the high of our ETF hype, and then it has acted as support or resistance multiple times. And that's why I still use it because this was, in terms of weekly levels or this black level here, it was the same as in the previous chart. So, this resistance and this level, both of them are very strong confluences, right? And now, if I take fib over this swing of ours from these lows back up. So this also presents us like within the same region. Like you're supposed to look for shorts within the 2800 and 3000 region, correct? Once we form this range, let me just, since we know what it is, I'll just remove it here. Post that, I was looking at this range. These are our range lows and these are our range highs. And this is the value area between 2650 till about 2472. This is where most of the volume was traded in this range. Now, what do we learn from this range? We keep hugging the lows consistently. Like whenever we are at the lows, we keep testing those levels again and again. And that is done on relatively high volume, right? This is our volume delta. As you can see, like whenever we get to the lows, we have some significant volume coming at these levels. which means that there's a lot of volume coming in to try and defend this. It takes a lot of, in simple terms, you can think about it in terms of, okay, it's taking us a lot of effort to hold these lows again and again. And every time we get to the highs, we have limited volume anywhere above 2600, 2650 or 2700. And it's always on a little bit of insignificant volume. The only time we came close to breaking out was on June 10th, which is right here, after which we had a quick fall down, and then we had this. Okay. Now, where did I start shorting and why did I end up taking profit at this level? Well, as we already know, my play was to take trades, take longs closer to this weekly level based on our previous analysis, and it was to take shorts closer to this level based on our analysis, correct? Now, where I started shorting was around 2700, right around this level, and my invalidation was price accepting over here and then forming a range or moving higher. And the reason I feel that this trade is a learning moment is because I did not have a price level for invalidation. Rather, it was volume. Okay. Now, why was it volume? Well, the last time we broke down from the 3400 or any level above 3000 all the way back down till here, we had, sorry, yeah, yeah. This is the volume profile when we broke down from there, right? Now, as you can see, there's a limited amount of volume anywhere above this black level. And then around this, we have a lot of volume, which means that at these prices, there should be people willing to trade Ethereum. But above it, anywhere between 2800 all the way till about 3100, there's not a lot of traders who were willing to do business, which means that since there was no support here when we fell down, there should be a lack of support or buying pressure when we try to go up into this area, right? So this should be resistance. So I started scaling into my shorts around this level, and then I kept adding on our entire way up. If we had consistent daily closes or some sort of bullish price action where we try to break down below this level, but we couldn't and we get back up, that is when I would have closed the trade. The reason I feel that this is a learning moment is because a lot of traders would have panicked and closed their shorts at this level, which was obviously not the right idea. And then we broke down. As I said, like there was no attempt to reclaim this level. In fact, there was a failed attempt, as you can see from these wicks and this large sell volume coming into our value area lows here. There was a failed attempt to break out and a failed breakout. The best bearish setup is a failed bullish setup. Okay. So I took first profits around 2450, but I was fairly confident on price going lower. So once we came up again, we rejected from our value area high, which is around this level. And then there was a rejection from our anchored VWAP, which we've been using for the better part of a year as support and resistance. This is where we added to our shorts. And since we already tried to break out and we could not, this means that if we are getting above this price, that's where you're wrong on your short, right? So there are multiple bearish arguments. We broke back into our value area range. We failed to break out. So this was one of the perfect, anywhere in this region was one of the perfect places to take a short, which is where my average entry ended up being. And if we get back above these levels or our upper weekly levels, if we get back above there, then it means that you're wrong on the trade and you need to get out, correct? In this case, you should have taken profit at your range lows. This should have been TP1. And then the final target, as you take gradual profit, should have been the weekly level below, which is what we discussed and which is where I took profit, as you would have already seen from my screenshot. Now, this weekly level a good buying opportunity? In hindsight, yes, it was. But I was not looking to long Ethereum since Ethereum was lagging a little bit compared to other coins in terms of the recovery. And I ended up trying to long Sol, which worked out really well. I made a post about this as well. This was the same exact setup that we took on Ethereum, but the inverse of that. So instead of the highs, we anchor our VWAP to the lows and we look for our bands and our fib levels. We take a swing. So this was our April swing lows and this was our May swing high. So this entire move can be considered one giant swing. We had a pullback into our golden pocket fib levels. This was also in confluence with our VWAP bands. So this gave us a nice long trigger. This is the first trouble area since, 1 second, since this can be considered our previous range that we broke down from. Since we got a nice entry based on higher time frame levels, this should be the area to start taking profits, maybe leave some partials and see if we can get above this level or do something like this, in which case you would long at 145 or anywhere between 145 to 150 again and target the range highs here and the VWAP band highs here at 165 to $70 on Solana. One last point before I go. It's important, like this is a very high confluence signal in crypto that whenever Ethereum open interest is extremely high or it rises much more quickly than price, that is a good time to look for shorts. So this is the context. In terms of what we saw in the previous chart, you saw, okay, what type of um, levels and what type of structure are we looking for? And in this case, you can see what type of context in the grand scheme of the market we're looking for. So the reason to short was also that, okay, we formed a distributive range and we had some volume confluence, right? Simultaneously, what is the context of the market scenario? Well, in terms of the market scenario, Ethereum had a really large fall, which is a straight downtrend from $4,000 all the way down till $1,400. And this happened over the course of almost half a year. In this while, it underperformed Bitcoin significantly, and suddenly it was showing strength against Bitcoin. But while it was doing that, you saw that price is up around 100% and open interest is up around 170%, correct? So that's one of the reasons to look for some shorts.